The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a wonderful day out here. It is April 25th, and we're once again at the headquarters of Technical Trading and Investing, TFNN.com. And kind of an interesting day here in the market. We had some very interesting results for earnings last night. The market shrugged it off. We are going into about 40% of the S&P 500 already reporting. Of those, about 70% now are breaking or exceeding the earnings per share market, but we are now down around 35% of those just making the revenue numbers. That should tell you a lot. Everything is being tossed in, including the kitchen sink, to try to make the top-line numbers. 3M last night, we'll talk about some of that, some of these others, basically saying that they are going for cutting costs to keep the EPS up, and, of course, that means firing people. So we'll be getting into a lot of these earnings here in a few minutes, but kind of very interesting to see that that we are, I suspect, very much like Bitcoin. When I brought Bitcoin up, it was $110. It went to 250, and then it went to 40 or 30. And I don't even know if it's still open today. I noticed that some of the exchanges went ahead and closed. But what can you say about it? We are in a bubble. It's very hard for me to watch the infotainment TV like CNBC or Bloomberg, because it seems everybody is rather, Pollyannish, whistling past the graveyard. They won't bring up 3M. They don't bring up Qualcomm for more than a minute, and they get right back on the mid to lower, let's say mid to small cap stock that had 30% short interest, and they'll spend an hour on that because it was the winner. This is called survivorship bias, and I really need to understand that we have a very narrow market that's mostly being pushed by ETFs in these large indexes. They are cap-weighted, so we're seeing the ones with the biggest cap get the most amount of money, and that's pretty much the way things always go. If you listen to the show online, you probably hear a little bit of music at the beginning of the show. Just wanted to bring this up. I was thinking about it. We have a couple of engineers that are pretty good guys, Alan and Steve in the booth. If you do call in to any of the shows, including mine, just remind them that disco is dead. We don't need to go back to any of the really bad Men Without Hats, Flock of Seagulls, or Flock of Crows, or all that horrible music in the 80s. There's so much good music. Why should we have to endure the incredibly painful music that these guys pick? I understand it takes them back to the days of DJing the all-skate at the local skate rink, but we've got to move on. It's time to move on. Besides, there's such great music. Even out in the 80s, you can find great music. Why should we eat McDonald's hamburgers when we can go to the greatest steak place in the world for the exact same price? It doesn't cost us any more, Steve. Just think about it. Think about me. Think about my ears that are bleeding. We need to get on and move on with our lives. Can't we just all get along musically? And that means forgetting disco. We can listen to it on the radio if we want to. But here at TFNN, we need to start thinking about the poor ears of people like me. Your humble and lovable and squeezably soft host, David White, hosting the Power Trading Hour. Anyway, we were going to get back into stocks here. I just had to get that off my chest after being inundated with really bad 80s disco music last night. We've got a fairly decent move up in the S&Ps, about 13 points with 2.5 billion shares as we speak, starting the beginning of the show. I'm going to get into this a little bit, but we've got. I guess I'm at the point now where I'm starting to have to think. I've got a couple of short positions in equity. I'm still cash positive on those. I've got some other positions in options that probably not doing so well, but I've got earnings tonight on one of them, and we'll see. I'm going to go ahead and ride that one out just because I think the almost all these big caps out here have been rolling over. It's these mid caps with high short interest that have been popping, and we're going to go through a few of those in a moment. If you did miss it today, we had yet another failure of the stock of the computers in the stock market, and it is the options in Chicago. They added a new software update, which failed. They finally got it back up, I think, about 1 o'clock today. But if you'd been or trying to use S&P futures out there, options, you would have found out that it was somewhat problematic. You could have gone to the smaller contract and the exchange right across the street from the CBOE. But if you're a huge fund manager or a big Wall Street guy, you just can't buy enough of those minis to do much with. So I have a feeling that part of this market was a little muted why those options were not available. We're kind of coming off that now with the S&P up 13 points. Is the volume anywhere close to where we need to be to break out? The answer is no. But there's as long as there's one stock that will bounce 20% at night, it seems that the market's shrugging off the three huge big caps that are cratering. So we'll have to take a look at that. Anyway, I wanted to comment first today about Qualcomm. And it is, of course, down fairly significantly, got down to 61.79. Let me get a quick read on that just so I know. And look back at it. Qualcomm. Last 62, is that right? $62? Okay. $62.04 off about 6% today. They are starting to have the same issues that Apple is having, and I suspect for the same reasons. Apple, for a number of years, was able to browbeat any of its suppliers into giving them the best price possible. What has happened probably over the last 6 months, if you listen to the conference call, is that even though they are now having a lot more vendors out there, everybody, especially in the low end, is extremely price competitive, and a lot of these smaller guys are buying older chips with much smaller margins on them, and it was a margin story much like Apple, that margins were falling extensively well. Of course, we've got over 40 million shares, which is the highest volume pretty much, I think, of the last year. Let me go back here. Highest volume in the last year. So pretty significant. If you are watching on Tiger TV or in the den, you should see that it's come down and almost perfectly filled the gap. That gap happened on the 2nd of January. I suspect we're going to see almost all the stocks and stock market come back and fill these gaps over the next 30, 45 days. I'm not exactly sure what is going to make this market crack, but I am fairly sure from seeing the way that people trade into a market where earnings are declining and certainly revenues are, that they can't throw enough money at this market. If two soldiers die, they'll pick the next guy and throw a wad of cash at him and have him run up the hill. But to me, it looks extremely bubbly. Could we be in this Bitcoin thing where I talk about it at $130 and it still goes to $250? think we can. It is possible. I'm not planning on it, but I suspect I've got two good equity positions that won't move no matter what. They're complete dogs, so I'm pretty happy with those. The question is, am I going to be right on a couple of my option positions over the next 3 to 4 weeks, where a lot of these big caps, like IBM, have rolled over on heavy volume. Anyway, we got to Qualcomm to begin with. Wanted to go back and look at which is down 6%, just under 6% out here. Citrix Systems, CTXS. And as we look at that, another one that popped out, it's got been able to recover a little bit better than Qualcomm has out here, but another one that went back, filled its gap. If I can actually find it here. My mouse is still having problems here. I need to spank it a little bit so it'll be better. On the 11th of December, you had a little gap up there. It happened on 3.7 million shares, and that was December the 11th. We came back in there and tried to fill it today on significantly higher volume. So I think we can see stocks like Citrix Systems probably, even though we've got a bounce out of this thing, probably look for this thing to exhaust for a while, but then come back down into that $60 range fairly soon. Right now, $64.47. Citrix Systems provides cloud computing solutions that enable information technology and service providers build private and public cloud networks worldwide. So it is one of these, and there is a theme, at least in this sector, that you need to be aware of, and that is the declining profit margins, mostly pushed by Amazon for lower prices. But even as you get more lower prices, your profit margins are falling. It's exactly what's happened in Citrix Systems. I suspect Amazon to start posting lower profit percentage numbers, which is probably not going to help them either. You can have all the business in the world. If you don't make any money on it, it just doesn't matter. But anyway, Citrix Systems down. Again, a huge, heavy volume. There's several of these in this arena that look to me like they have a great potential to actually maybe pop again here and get us a chance to maybe pull the trigger on them short again today. On the long side of the market, at least in the NASDAQ 100, the big king dog out here is Akamai. This thing always has a nice surprise around earnings. It was up, and, of course, it jumped right on the other side, and with monstrous volume to the top side of previous resistance. Last time we saw the prices around here was January 2nd, $42.53, 2.4 million shares. We're blowing right up to that with 12 million shares. I suspect this is also an exhaustion move in the stock, and we're probably going to see this thing move sideways for a few days out here.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at DirectionFunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, still looking at a market that is rather interesting out here. 1591 in the S&P cash. 2.65 billion shares. So volume is a little bit better than the last few days. I suspect that a lot of people that had shorted up here at the last few times are probably covering a little of their shorts, and we're getting just a slightly better volume high than we've had before, but still way below the probably 5.5 billion shares that I'm looking for to make us think that we actually have some real large move coming out of this marketplace. And a opportunity to bang out these highs or break them out. So I'm going to sit on my shorts for a little while longer. I wasn't looking for a one-day or one-week play. I think we've got probably the big money's going to be sitting still, even though a lot of people probably the hardest thing to do, and that's also when I've made the most amount of money. So anyway, when we were talking about, I wanted to look at some other stocks that are in play today. We had Intuit, INTU. Intuit is off almost 13% today. And this, again, we've got these a lot of gaps that have been out in this in these stocks, and a lot of them are getting filled on earnings over the last few days. We've got a few others out here that are just a little bit but we continue to see, just huge moves on monstrous volume down. I don't know what else you can say other than this thing's headed directly for the $53, 38-cent low from May 18th of last year, and why you always have to look for these high volume lows. This one looks like it could blow them out fairly extensively. Other stocks in the move out here today. On the positive side, we had EQT Corporation, and it beat the EPS by 14 cents. Also beat on revenues. One of these few decent volume out here, not the highest volume out here, but certainly I think we could say this one is a breakout. It does have significant volume, and we need to be watching exactly probably in a few days out here. If this thing could get back to $70.47, it would be very, very light a volume back at around mid-70s, and that would be it might be very interesting in this. But one actually with nice volumes. Another one that beat out here was a BG, which is Bunge Limited. Of course, a lot of these stocks that have just been hammered over the last 30 days in the space of natural resources has been pretty horrible. I mean, they've been horrible, but maybe a little oversold. Nice. This one's coming back up to 618 on this. But notice one thing, and that is pretty much a lack of massive volume in this thing, and makes me think that maybe we've got the next ABC setting up on Bunge Limited also, which is symbol is BG. They buy a lot of that, if I'm not mistaken, a lot of those mining equipment company stocks. But as soon as they find out the end isn't here, a lot of these stocks are bouncing. We saw that in Cliffs, which is, I think, CF, right? Is that right? Cliffs Natural, CLF, excuse me. Cliffs Natural, another one in the iron business. Kind of same thing, a little better volume out here in that volume in the move here. I got to get this mouse fixed. This thing, come on. Oop, I just fired my mouse ball across the room here. I had to go pick it up. Okay, this one is popping a little lighter volume. This thing continues way down off the $28.05 low out here. You could see a move back in there, but that's going to be resistance in that area. It is going to be, pretty tough, I think, to get much more than that anytime soon. Citrix Systems, we talked about that. Akamai. Cabela is another one, another nice little mid-cap stock out here that is breaking the highs with nice high volume. Of course, the sports, what do you call them? Sports apparel, sports goods, kind of a like a Bass Pro Shops thing. Has a lot of lounge gear, that kind of stuff. Doing fairly well today. This thing, kind of interesting, is that it needs to hold this $62.22 high from March 13th. Had 1.3 million shares. He had plenty of volume today. This thing should be easy to hold above these highs. So we'll be back in just a few minutes.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Back, we're going to be checking out the market a little bit more. I'm looking at a few stocks that are probably going to be moving after hours out here. S&P at 1590 as we speak, 2.7 billion shares. Be very interesting. I'm going to have to let my shorts ride out here. Suspect that we're going to be doing okay, but there's probably the odds are probably 30%. Maybe we go 20 points higher. I think the odds still are for a surprise to the downside. We're going to have Amazon after the bell tonight. I think that's probably going to be a lot of what we're looking at in this marketplace. We still see some stocks moving, like Microsoft up 22 cents today. It had a little breakout here. What this is mostly about isn't a huge change in the future of Microsoft. It is the belief that this new activist firm that announced that they bought billions of dollars worth of stock of Microsoft are going to have enough now to go force and embarrass Steve Ballmer out of the CEO position and maybe split up the company and unlock a lot of value in this company. You could make a decent case that Microsoft's worth upwards of $60 a share if separated and parted out. But it'd be interesting. Amazon, for its part, is up a bit today, up $6.42 pre-earnings, mostly on a lot of blather about them making their own device. My guess is that Microsoft's going to win that market hands down with their new Xbox 720. A lot of features, not just a device to plug in and watch videos. Microsoft, of course, is getting together with Netflix to push their streaming video service, and even Microsoft may get into their own also. But if you're talking about a box that has huge penetration in the marketplace, it's going to be Microsoft's both Xbox 360 Legacy and probably the big present for this Christmas, which is Xbox 720. What can you say about it? Intel down 6 cents today. This thing is looking more like Microsoft, more like IBM than some of these others that have taken off with high volume. It did break out. A lot of that was short interest. I still think that we're probably going to be able to see this thing get back to 19. And in that area, I think we're then going to be able to see that thing roll on back up to 30 once the worst of the market weather is over. You can always give me a call at 877-927-6648. That's 877-927-6648. I'd appreciate your call. We've got Apple out here up $4 today. It's still in that miserable trading range, and within $2 of where it closed, $3 where it closed on the day before last, before earnings came out. So we've had a lot of thunder and lightning and not much movement in Apple. Even with the $60 billion share back buyout, not a whole lot of interest in this. I suspect that they think that the worst is still to come in Apple. We should see, even in the, if it was moving down, some higher volume, and I suspect this is the big place where it's going to be distributed to funds that mostly specialize in buying stocks that have dividends. Google, not much of a movement either today, down $3. Facebook's up 16 cents. We're just looking at some stocks out here without a lot of movement. One probably the most interesting to me that I've been waiting for a while is another one of these smaller mid-cap stocks. FIO, of course, makers of SSD hard drives. This thing has come off the bottom. It's come off with a fairly decent volume. Unfortunately, it popped right up to where a lot of resistance should be and filling its gap. Unfortunately, as I kind of thought and what I've worried about is it is back up to its gap down day pretty much on lighter volume. I don't think we'd have to have a whole lot of volume to get up to the, 18 million? Yeah, 18 million shares that it had on its down day of the 31st of January. We are coming back and up through this, so I suspect tons of resistance and, probably more of a consolidation back here. This thing could get once again back down to the maybe 16, 15 and a half. Maybe the worst is over for Fusion IO, and we might see things do better. But I think we probably have 30 to 45 days to look at that. ARMS Holdings, of course, came out with a fairly decent earnings. Another one of these that has not been able in 2 days to post a real follow-through. You'd like to see this thing have much more volume. Come back up here. It broke above its previous highs. What you really need to be watching about on this one is the CEO. No, I haven't done IBM, but I will here in a minute. What I do worry about in ARMS Holding is the CEO resigning. I think that you had him probably throw the kitchen sink into the books to make earnings look as absolutely wonderful as possible on his way out, exit stage left. And I think a lot of people are probably thanking their lucky stars. It is very uncommon for a stock like this that's had a huge run to not have the new CEO that replaces him go through and clean out all the bad bookkeeping that has happened before. So you almost always get a fairly decent pullback in the first 3 to 6 months of a new CEO. I think a lot of people are actually thinking about that. Had a question about IBM. Let's take a look at that. Of course, they came out. We've been looking at this stock for a while and talking about this pattern, and this is what you need to be watching for. That is, breaks above previous highs. You get a lot of volume for one day, and then that's it. You get closes below the previous high. The ones that I've been looking at were 211.79 and 208, the October 5th high and the May 1st high of last year. But you never had the kind of follow-through that made you think there was a real sign of strength. Normally you break out, you have a couple of 2-3 days higher, you get everybody wanting to come in, and then hopefully you get the nice pullback on light volume back to that area. We never got that. We've got basically one big day of volume. Went closed lower, kind of bounced around in narrow trading ranges. If you are watching IBM during those trading days, and I saw what I thought were signs of distribution, and they were all the way back. Once the thing did close back below that 211.79, a pretty decent sell signal. Anyway, okay. Okay, we're looking at a few other things. I'm just reading the chat room here today to make sure what's going on a little bit. Of course, we didn't even get to gold yet. Gold, a nice little pop out here. We've got $14.6470, up $41 on the contract today. It is just tough. Somebody asked, did you write that yourself? I'm wondering about write what myself. Anyway, what else we're looking at here? Oh, I wanted to go back to some of these other stocks in the that are moving in this market here. So let's see. Let me get to them here. Apollo, Baidu. Baidu's up about 4%. I think. Let's take a look at that. I haven't checked on it. Of course, a lot of this is probably academic. A lot of this is going to do with a huge earnings route after the bell, and probably between now and then, just a lot of sitting on their hands. If you go back and look at the April-May highs of 2010, this market is acting almost exactly like it, except we have a huge difference in volume. Back then it was a lighter volume, but this is very different. We've got a lot lighter volume. I mean, significantly lighter volume. Like I said, I'm looking for 5.5 billion shares to really have us break out these tops around here in the high 1500s on the S&P cash, and I just continue to don't see it. In fact, every time we come out, we've got all these stocks getting blown apart, and a few, almost all, mid to smaller caps with high short interest. In fact, we continue to have the lowest short interest in the S&P 500 stocks of several years, and that always is a element of caution because everybody's on the one side of the market. You need at least somebody on the other side of that trade. And right now, for me, it is kind of a rolling auction higher in most of this marketplace, and that's what really makes me wonder. You did have a decent buy signal on Baidu. I think we talked about that a week or so ago. High volume low, and that was back at the $85.96 low on September 6th. You bounced up, came back all the way, but you really didn't have that kind of 8 million share day. A lot of about half that. You had one day where it gapped up, and it actually gapped up on decent volume up to that. A little bit of pullback. We're actually breaking back through that level today. Not a lot of volume, but I think you've had enough out here to maybe say that you've got at least a short-term bottom in Baidu. The big thing is I'm still worried about the finances of any of these Chinese companies. They still haven't worked out the deal where we get the books for all these Chinese companies. And a lot of people are just whistling past the graveyard on that deal. I suspect if we actually got to look at their books, we'd find out maybe they weren't as strong as a lot of people thought they were. To see, what else I wanted at NASDAQ? Prices in play. A few other stocks I wanted to look at. Safeway, SWY. A lot of these companies are seeing decent revenues, but the profit margins are razor thin, and when they turn they turn hard. Safeway is one of those companies, and probably why there's a few companies out here in high tech with very super narrow margins that could easily disappoint and have a huge moves down. Safeway, SWY, looking at this one down on monstrous volume today, blowing away huge amounts of trading. But if you look at this, another one of these things that was continuing up, and some of them at least have decent volume. This one just had pathetic volume at the last 30 trading days or so. Safeway is SWY. You really never got a good indication to pull the trigger other than this thing had horrible volume. Again, some stocks like that, like Apple, never really gave us a technical sell signal other than maybe, breaking a moving average. But in things like Apple, we saw it in most of the stocks that surrounded it in its supply chain. Unfortunately, I would have loved to have gone short. I was looking for any kind of technical signal to short it. Same thing in this. Unfortunately, they were able to keep this thing going all the way into earnings, and you have to find out today enough of volume that makes me think we're going to be headed back over time to the $20 area where this thing started on a very decent volume. It may be in the high 21s where this thing settles out, but it did take off with monstrously decent volume on the 21st of February with almost 35 million shares. We're down with 21 already today. Figure this thing closes out with 25, 28 million shares. Still probably not going to collapse this stock to zero, but I suspect we're probably going to see a lot of movement now that we're in that magic candle from February 21st and see that move out there. Again, you can give me a call at 877-927-6648. Glad to talk about it. Another one, MLNX. MLNX. And Mellanox Technologies. I'll go ahead and read from it. Probably not the end of the world out here, but another one of these with super high volumes at the lows. You want to see where everybody's pretty much given up with interest on this thing, and they did not. Mellanox Technologies is a fabless semiconductor company, produces and supplies semiconductor interconnect products for computing, storage, and communications. Anyway, it is down. The volume's a little higher. It's not so bad. One thing that you don't have, though, you need to get back into this candle where you had monstrous volume on the 21st of January. That's probably going to act at some level of support, but I think you can get easily probably back into the mid part or lower part of that candle. And, of course, we're at 41.75 on that January 24th low. Could it get back in the $45 range if the volume doesn't pick up? I think it could fill that candle by about half, and we might start to see some kind of support level in that. Again, one of the smaller companies out here, but still a lot of these companies that have missed. We'll be back in just a minute. Give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And remember, when you call in at 877-927-6648 and to discuss what you would like to on this show, remember to tell Steve or Alan that disco is dead. And as we finish up the show here today, I wanted to look at a couple of these stocks, and this is why, I'm a little nervous about this market, just because of the action of the stocks. Broadcom comes out, surprises, get a nice movement out here, big volume, pretty much almost the largest volume here in the last 3 months. So not a bad day 2 days ago, but we get a little bit of pullback, a little drive to try to get above the previous high. That on Broadcom, DRCM, of course, the affiliation, of course, with Qualcomm. But $35.50 from January 17th, 2012, $35.50, 5.2 million shares. We went through it with basically 16 million shares yesterday. Didn't close above that high. We've got about 8 million shares and moving back down south. Now, does this mean I'm going to be shorting this thing? The answer is no. But what it does mean to me is I think that a lot of these stocks are just, like I said on Broadcom, probably some decent short positions in these things. But once they have a huge day, that's it. You're getting exhaustion moves in one day in these stocks, and they aren't having the follow-through that we look for, much like IBM didn't have the follow-through that we were looking for. I think we're seeing a lot more of that. We've got Doug from Atlanta. How you doing today, Doug?
I'm doing okay, David. I was calling about Netgear. It had a lot of activity last week.
Yeah, Netgear, for a stock that should be ripping through highs, is having a lot of problems. Not a bad-looking chart out here. I've been looking at this thing at the lows, but maybe I'm hoping to find maybe another day where this thing comes back on very light volume, and then we see that. Of course, it did have some significant volume down just a few days ago, and I suspect that's going to make this thing consolidate a while longer. One of the reasons I wouldn't hop on it just yet. A lot of, 2.6 million shares down. But, now that you've got Cisco getting out of that home router business, they are pretty much the last big major company in that area. Unfortunately, with everybody buying tablets, they're not buying a lot of routers for computers. And I think we've probably seen part of that. They're certainly going to need faster and newer routers. The problem that I've seen in this company also is that almost always the company is providing those wireless routers. Verizon, when I signed up with them, brought me their router. And would I buy this router if I didn't get it from them? The answer was no, but unfortunately I'm kind of stuck with it. So Netgear, the best of everything out there. The problem is just the general malaise in the PC business, but I think that's probably going to be coming to an end here midsummer, and I'm going to be looking at companies like Netgear. I think still a great company, still very good products out there, just a victim of the entire bad PC marketplace out there. Sans Microsoft, where they're bouncing that thing up because they're splitting it apart. But I don't know. I'm just going to give it a little time because of that huge volume down on the 16th.
Okay, that's what I was looking for.
Yeah, I mean, I think you're looking in the right spot, and I love that it's down here at light volumes. I dislike that high volume down, which makes me think this thing's going to go sideways for a while before it really starts taking off.
Great.
Thanks for the call, Doug from Atlanta, and we'll see you all tomorrow. Same bat channel, same bat time.